the week ahead. We're going to do this in three parts. First, we're going to talk about the bigger picture with the bonds and the potential for stagflation. Then we're going to take a broader look at the market. And finally, we're going to come down taking a specific look and action points for Monday using the daily profiles. Sometime back, for 2 or 3 weeks in a row, on the week ahead, I talked about the potential for stagflation. Stagflation occurs when inflation stays high and growth slows. Now, we're not sure if growth is going to slow, but certainly when you look at the bonds in front of you, you look at the 10-year bonds, the market has yields have risen substantially. Earlier in the week, we did a public webinar, and during that public webinar, I mentioned to keep an eye on bonds. I have found over the years that sometimes the bond market is more perceptive than our stocks. The next thing I want to talk about, and this makes trading very difficult. A lot of times you will hear academics say the markets are irregular. It's not uncommon for, short-term traders just to kind of pass over that and not pay much attention to it. But it is truly something you should focus on. When we talk about irregular, let's just mention 3 things that have happened recently. One, a few days ago, was we opened the market in the morning and the market was strong because of Chinese stimulus. Another day we come along and the market is weak because of a military skirmish. Today we come in and the jobs market numbers are very strong and have a positive impact on stocks and a negative impact on bonds. I don't know of anybody that or any reliable sources that were even close to the jobs market. So all of these things fall in the category of being irregular, and they make it very difficult to navigate markets for those that are always looking for some kind of continuation. As a short-term trader, we always have to handle current business first. Now, next, let's take a look at a bar chart for the ES. When you look at the bar chart, you will see that there was a trend line we talked about a couple of weeks ago. The market broke below that trend line, got some pretty decent liquidation, and now today rallied back up just below that trend line. Also, you have the 5,800 level. So the trend line and the 5,800 level are 2 references that we will be looking for next week. If there's anything to today's rally, the market will find its way back above the 5,800 level. Now, let's look at the daily profiles and let's be a little bit more specific about what we would look for on Sunday night and Monday morning. We've already talked about the 5,800 level. And the market today went up and took that out, but notice there was no late follow through. So it wasn't like the market was tremendously strong. So the 5,800 level marked A as a first reference. B marks the spike base. And I took the spike base from the late afternoon rally. Now, yes, part of that covers the early morning, but specifically, it looked to me like the market changed late in the afternoon, and that's where I've marked the spike base. So remember, that may not fit the exact definition, but trading is an art, not a science. So if there's anything to the downside on Sunday night and Monday, the market will find its way back below the spike base or below B. Next, take a look at C. The market, and this is usually an indication of very short-term time frame trading. When I say that, I mean the weakest of traders. Look at how we had 4 lows that almost perfectly fit a trend line. That's just a clear sign of very short-term trading. So that C, if there's any real substantial break to the downside, first we get below 5,800, then we get below the spike base, then we get below the trend line marked C. Next, we would look and get below D, which of course would be the low on Friday. Change of subject here slightly. Friday was a difficult day to trade. However, it was made easier if in fact you focused on value. Notice that while the market was trading off, value was higher all day long. So many times traders get caught up in price and they forget to look at the bigger picture. And the bigger picture, what was going on for today, was value was clearly higher. So what was short-term traders were doing? They were buying every break in that market. Like I say, if you hadn't been focused on value, it would have been very easy to have a negative attitude throughout the session. So as we come in on Monday, we've talked about the bigger picture, but the references for short-term trading would be A, below 5,800, B, below the strike base, C, below the trend line, and D would be taking out the low, and of course, E, extension to the downside. Thank you. Have a great week.